Hi there. Welcome to The Close. I'm Lindsay Biscaya in for Morella. Today, markets will be closing in half an hour from now. So first, let's get to some of the other stories we're following for you in the BNN Bloomberg newsroom. U.S. President Donald Trump says he is deeply disappointed by the Supreme Court's ruling against his global tariffs. Speaking at a news conference today, Trump says he will sign an order to impose a 10% global tariff and vowed that alternatives will be used to replace the rejected levies. Trump also pledged a slew of investigations which could allow him to enact more import taxes. The president says the Supreme Court did not overrule tariffs, just particularly the use of IEEPA.
I can do anything I want with IEEPA, anything. I just can't charge anybody for it. It's okay because we have other ways, numerous other ways. The ability to block, embargo, restrict, license, or impose any other condition on a foreign country's ability to conduct trade with the United States under IEEPA has been fully confirmed by this decision. So now there's no doubt.
Meanwhile, Canadian retail sales saw a decline in December, but are on track to rebound to start the year. StatsCan says receipts for retailers fell 0.4% in December, but a flash estimate suggests they are expected to rise 1.5% in January. The agency says despite U.S. tariffs fueling uncertainty, consumers continued to shop in 2025, with sales jumping compared to 2024. Sales were partly supported by a rush to buy cars at the start of the year as consumers tried to get ahead of the tariffs. And shares of Barrick Mining are slipping today. Newmont has sent the miner a notice of default after finding evidence of alleged mismanagement at their Nevada joint venture. Newmont says Barrick allegedly diverted resources from Nevada gold mines to benefit its fully owned 4 Mile project. Barrick CEO Mark Hill says he disagrees with Newmont's claims, but is limited by the terms of the agreement in what can be said. Okay, we'll take a quick check at the markets here. The TSX reaching a new record high yesterday. We're watching to see whether it will surpass that today. So far, it looks like it's going to, by 0.5% at the moment. If we take a look at U.S. markets, obviously, it's been an interesting day, particularly south of the border. The S&P 500, the Dow Jones, and the NASDAQ all currently trading up. So we're going to continue to follow one of our top stories. And for more on today's Supreme Court strike down of Donald Trump's IEEPA tariffs, we're going to bring in Lachlan Wolfers, national practice leader at KPMG Law. It's good to have you join us on an interesting day. Thanks so much.
Great to be here, Lindsay. Thank you.
So were you surprised by the Supreme Court's decision, and were you surprised by Donald Trump's reaction?
No, in short, neither were a particular surprise. So what I would say is, what this means is, President Trump's Liberation Day tariffs have now met Judgment Day. And not surprisingly, as President Trump himself has said, when he's backed into a corner, he'll come out swinging 10 times as hard. So what you've seen is the decision of the US Supreme Court, essentially saying that the use of the emergency powers, the IEEPA tariffs, are unlawful. And what you've seen in response to that is President Trump saying, well, I've got different tools in my arsenal here. One of the key pillars of my economic policy is to use tariffs. So a tariff a day keeps the doctor away, seems to be the saying. And so what you've seen is a response with an immediate announcement around the imposition of 10% tariffs in substitution, which the president has the authority to do for a period of 150 days.
That was going to be my next question, is can Donald Trump actually do what he says he's going to do when he's talking about charging an additional 10% global tariff? So why that time frame?
So that's essentially what the law provides. So it allows him to do it for up to 150 days. At the end of that 150 days, he can look to leverage certain other powers, but they're not as straightforward as the emergency powers. So there are 2 other powers that in particular he has indicated he will look to. The first one is Section 232. They're the powers that are currently being used to impose the sectoral tariffs, those that we see in Canada on auto, steel, aluminum, and lumber in particular. So he can do that, but he needs to follow a process in terms of doing that. And that process requires reports from the Commerce Department and the United States Trade Representative, so not as quick to do. The second major power that he looks to is around unfair practices, Section 301 tariffs that you're sharing with your viewers right now. Again, they can be imposed but require a report by the US Trade Representative, so not as straightforward. There is a third mechanism, which is to go to the US Congress. And the US Congress, effectively, this is the effect of the decision today, is to say the president can't unilaterally do that. He needs congressional approval.
Okay, so a lot of factors there. There's also the question about potential repayment of tariff revenue to some companies. Now, the Supreme Court has stated it's not going to intervene on that. Donald Trump today saying he's not clear whether that's going to happen. Do you expect companies to begin suing the Trump administration because of these tariffs?
So I would say many have actually already sued the US administration to protect their refund rights. So recent estimates indicate there's around 142 billion US dollars of tariffs that were collected under IEEPA powers that are unlawful. Now, as one of the Supreme Court justices noted, unraveling this is going to be messy, and they're absolutely correct. The reason why it's messy, if we stand back from this for a minute, is because tariffs are economically imposed on end consumers, but legally collected from the importer of record. So the only one who's entitled to a refund from US Customs and Border Protection is the importer of record. But as we know, those costs are typically passed through the supply chain from the importer to maybe a distributor to a retailer and then ultimately to the American consumer. How that plays through the supply chain is going to be particularly complex and lead to, in my view, quite a bit of litigation in the months and even years to come.
Yeah. Okay. That was my next question. $142 billion US. You say it's going to be messy. I was going to ask about a timeline, right? Because as you say, this sounds very complicated. It's a lot to unravel here, especially when both sides are not in agreement. Do you know how long this could possibly take?
So I think this is going to take some time, and there is actually talk around the establishment of a steering committee within the Customs and International Trade to try and unravel some of these particular issues. But let's look at what this means for Canadian business right now. I think the first thing that should be noted is this decision validates the Prime Minister's decision, Prime Minister Carney's decision, to effectively slowball a trade deal with the United States. Why? Because you could have been agreeing with someone who didn't have the lawful authority to be doing this in the first place. So I think it validates the Prime Minister's approach. But I think the bigger question is, what does this mean from the perspective of the CUSMA negotiations and review that are coming up towards the middle of this year? And that's tricky because on the one hand, you'd say, well, this is a positive component to it. You know, the president's powers have been effectively curtailed to an extent. But on the other hand, it could lead to the fact that part of the president's economic agenda is now at risk. And so do we need to look, or does he need to look at trying to recover more through those negotiations with Canada and Mexico in particular than would otherwise have been the case? I think there's arguments going both ways. The one thing I'll say is this. The biggest issue that business has with tariffs is uncertainty. It's the uncertainty of saying, how do I factor the costs in to my supply chain? And when you're going on a roller coaster ride, as we have for the last 12 months, the first time you go on a roller coaster, it's really, really scary. But each subsequent time we go on that roller coaster, we become more accustomed to it. And all I would say is we're going to keep going on that roller coaster, but I have a sense that we're becoming more and more accustomed to it. And that uncertainty impact is going to dissipate over time. So I'm a little bit more optimistic than some others. And I'm also optimistic because we're also heading into a period of the midterm elections coming up later this year. And the impact on the American consumer of these tariffs is going to be front and center in those election discussions.
So fascinating. Really good to get your thoughts on this and your insight. Thank you so much for joining us.
Great to be with you. Thank you so much.
Thank you. That was Lachlan Wolfers, National Practice Leader at KPMG Law. Well, as the markets continue to digest the battle between the Supreme Court and President Donald Trump, we're highlighting undervalued sectors to watch. That's coming up next. Stay with us. Political headwinds continue to stir the markets today as investors digest the battle between the Supreme Court and President Donald Trump. Our next guest says, make portfolios diversified again. Joining us now is Pierre Ouimet, head investment strategist at UBS Canada. It's good to have you join us, sir. Thank you so much.
Well, it's a pleasure, Lindsay. I'm glad to be here.
I like your slogan. What do you think about, everything we're seeing today? And does this ruling kind of reinforce your positive outlook on the markets, or are you thinking things could go in a different direction now?
It doesn't alter our perspective on things. It's it's finally out of the way. We have a decision by the Supreme Court, but it looks like the administration is fighting back. So I see that they want to impose a 10% global tariff or something like that. They have other recourses in terms of imposing tariffs as well. So, we're not out of the woods yet as far as the tariffs are concerned. So, but we're prepared to live with that. So, I think there are political issues that are ahead of us here that are probably going to mitigate in favor of not too much, not an aggressive stance on the tariff positions, and maybe the situation doesn't really deteriorate from here. But we're focusing on other fundamentals, and they're still quite good.
And I want to get to your make portfolios diversified again in a moment. But just first off of what you just said, do you feel like markets and investors are maybe becoming a little more immune to this uncertainty that we're so used to seeing now?
Oh yeah, I mean I'm surprised the market reaction is there's no reaction really. It's to a large extent it was probably expected. So a lot of people thought that the Supreme Court would decide in that direction. So not a lot of surprise in the market. I'm surprised the bond market didn't react more because there's this whole notion of reimbursements as well, something close to $200 billion or so that would have to come out of the Treasury. But, listening to Besson today, he doesn't seem to be worried too much about that. He seems the revenues are going to keep on accruing to the Treasury. So it's, it's kind of a mixed bag really right now, but it doesn't really change the fundamentals that much.
Yeah, it is interesting to see the bond reaction for sure. Okay, let's talk about make portfolios diversified again. When it comes to diversifying your portfolio, where do you think investors should be doing that?
Well, it's... starting last year, we're kind of phasing out, we're not maybe phasing out, but reducing our exposure to U.S. assets, U.S. dollar-denominated assets, which has turned out to be a relatively wise decision, either repatriating to Canada or going in other jurisdictions like Europe or elsewhere. And, of course, the U.S. dollars come under pressure. So I think that continues, and the idea is to have your fingers in multiple pies and not necessarily focusing on one particular sector, one particular trend as well. So that's really what we're emphasizing is wide diversification. So we still like the tech sector, but we're a little bit more selective. We also like the resource sector, particularly gold, but even energy from a long-term perspective as well. Energy and metals, base metals. The whole AI theme continues to be relatively buoyant as well. I mean, we're kind of evolving very rapidly on the AI side, and as you noticed lately, there's been some weakness in software stocks. So that's kind of the third reiteration or the third wave of what's happening in AI, which is starting to develop.
Are there any sectors that you feel are undervalued right now? Like you went over the sectors that you like, but anything that you think is undervalued?
Well, energy is a sector definitely where there's a lot of good value, a lot of free cash flow. You look at free cash flow yields, for example, they're quite attractive. There's just not a lot of love for the sector right now, and that's showing up in the valuation. So that's an area that's relatively undervalued. Probably the mining sector and gold in particular. I mean, the valuations have come up, and the stocks have outperformed the commodity, no doubt. But the leverage on these price increases is extraordinary. Looking at the fourth quarter numbers of most of these mining companies. I mean, you look at the free cash flow and the EBITDA, and it's just soaring right now, and it's probably likely to continue. We think that gold still has the potential to go higher. And in an uncertain world, it's a safe haven asset, and it's a little bit like the Swiss franc to a certain extent as well, has attracted a lot of capital because it's considered as a safe haven.
Mm-hmm. When we take a look at the TSX in particular, even over the last couple of days, it's been reaching new highs every day. It looks like it might do that again today. What do you make of that? I mean, you talked about, gold prices are up, which usually means the TSX goes a little higher, but what else could be some of the factors there?
Well, I think what we're seeing, broadly speaking, I mean, this is conceptual and it's kind of broad strokes, but clearly the return on capital is increasing, continues to increase. And we're seeing margins at record levels. And I, for one, last year was a bit worried, saying that maybe margins are peaking, but they're not. Margins continue to increase, and the expectation is that they will continue to increase. And what happens with AI? Once you start kicking in the productivity gains, does that mean that margins expand even more? And from that perspective, it probably means that if you look at what, the fight between labor and capital, it looks like capital is winning out, quite strongly. So return on capital will probably continue to increase. And the labor side is going to continue to struggle, particularly with the advent of AI. I mean, that's a little bit of an uncertain future as far as labor is concerned. And that means that earnings are going to be a lot stronger. And an environment where rates are stable to potentially going down, that's the other thing. What's the Fed going to do? In this environment, we saw the GDP number out of the U.S. today. Of course, it was biased by the government shutdown in November. But the U.S. economy is, and labor in particular, is probably going to continue to slow, and that could probably push the Fed to reduce rates a little bit further somewhere down the road. So that will help the markets as well. I mean, earnings and interest rates are what drive equity markets.
For sure. Okay, that is all the time we have. Pierre Ouimet, head investment strategist at UBS Canada. Appreciate your time. Thanks for joining us.
My pleasure. Thank you.
Thanks. Up next, Donald Trump is reportedly weighing an initial limited military strike on Iran to pressure it into a nuclear deal as the U.S. military continues to build up its force in the Gulf region. We've got more on that coming up right after this. Welcome back. Let's take a look at the markets before the closing bell, which is happening soon. We'll start with the TSX. This is something we're watching closely today. Yesterday, it finished at 33,594 points. So we're watching today. Obviously, right now, it's above that, expecting another potential record high throughout today. And so we'll continue to watch that for you. Obviously, some of the big gold mining companies doing quite well today, including Lundin Mining, First Majestic Silver. So we'll continue to watch that for you. Another interesting story, of course, that we're following today is the U.S. markets. There's been a lot of movement throughout the day. Markets currently trading up right now, not seeming to be fazed by this Supreme Court ruling and Donald Trump's backlash to that ruling. The S&P 500 up by 0.5% at the moment. The Dow Jones is up by 0.3%. The NASDAQ up by 0.7%. Of course, earlier today, we saw stocks rising despite this news. Bonds falling, though. The dollar slipped as well as traders kind of weighed what's going to happen in the future. And the Canadian dollar also down by 0.01% at the moment, so falling. So we're going to have to continue to see exactly how things happen here. Obviously, Donald Trump rejecting the Supreme Court's ruling, and that could pose further uncertainty. But as we were talking about earlier, it seems as though investors are pretty immune to that uncertainty at this point. Okay, U.S. President Donald Trump, meanwhile, is considering a limited military strike on Iran to encourage compliance with his nuclear deal demands. Meanwhile, both parties continue to pursue diplomatic negotiations. So we're going to welcome in Sina Azodi, assistant professor of Middle East politics at the Elliott School of International Affairs. It's good to have you join us. Thanks so much.
Thank you for having me. Good to be with you.
This is interesting when we're watching what's happening in the Middle East, the biggest military buildup since 2003, apparently, with this kind of ultimatum we're seeing right now. Do you think that an agreement can still be made through diplomacy between the two sides?
It is possible, but it will be very difficult because the minimum that the Americans are willing to offer to Iranians doesn't match the maximum that Iranians are willing to offer. What I mean by that is that the Iranians have been demanding uranium enrichment on Iranian soil, and public reporting based on what we've heard is that the U.S. is not willing to give or accept uranium enrichment in Iran. It also requires Iranians to discuss their missile program, the so-called proxy forces, which I don't believe that Iran is willing to discuss and negotiate over them. So I don't say it's impossible, but I think it will be difficult And I think in the past few days, unfortunately, the likelihood of a conflict has increased.
It's interesting. I mean, you mentioned those points, the nuclear program, missile stockpiles, funding of proxies. Is there one of those that is the main factor here, do you think, or is it all three?
Well, I think at least two of them are negotiable, meaning that in the past, Iran has offered to the United States to help Hezbollah, one of Iran's proxy forces, to transform itself into a purely political organization. This was an offer that the Iranians made to the Americans in May 2003. The U.S. ignored it. So I believe it's possible. On the missile program, Iranians have publicly said that they have imposed a voluntarily 2,000-kilometer range on their missiles. This is something that they said publicly. They don't have any long-range missiles. They could codify this into an agreement, but the question is what the United States is willing to concede to Iranians in return. Now, on the issue of uranium enrichment, I think Iranians would be okay with a temporary suspension. Now, you can discuss the length of it in negotiations. I don't know, 3 years, 5 years, that could be discussed. But over the principle of uranium enrichment, I think that's Iran's brightest red line.
It's so interesting. Just in our last minute, if the U.S. and Israel were to launch a joint strike against Israel, what scale of an attack do you think we would see?
Against Iranians? Well,
against Iran,
I think,
sorry, yeah.
Yeah, I think the president has said, the U.S. president has said that it will start with limited strikes, and then if Iranians still refuse, then he's going to escalate. Nobody really knows except the president what he's going to do, but I think his objective would be to first degrade Iran's ballistic capabilities, and second, potentially to attack the remnants of Iran's nuclear infrastructure, which last year he said he completely destroyed. So, yeah.
A lot to watch for. Unfortunately, that's all the time we have. Sina Azodi, Assistant Professor of Middle East Politics at the Elliott School of International Affairs. Appreciate you joining us today. Thanks, sir.
Thank you for having me.
Up next, the closing bells on Bay Street and Wall Street. Stay with us. Here are the closing bells at the NASDAQ Iron Horse acquisition. The second is ringing the closing bell at the New York Stock Exchange. Cheeto rings the closing bell. You are watching The Close on BNN Bloomberg. I'm Lindsay Biscaya. Here's how we close the day on Bay and Wall Streets today. Okay, watching the TSX yesterday hit a record of 33,594 points. So today it looks as though we may have surpassed that. The TSX finishing the day up 0.6%. S&P 500 and the NASDAQ also up. NASDAQ up almost a full percentage point. Pretty interesting given the day that the U.S. has had in particular. Traders seem to be kind of weighing what's going on there pretty carefully, but not really putting too much stock in it at the moment. If we take a look at some of the big movers on the day, particularly on the TSX, Lundin Mining, one of the top performers on the TSX today, finishing up 10%, more than 10%. This comes after this company reported fourth quarter results that saw record revenues and record free cash flow. Eldorado Gold, one of the worst performers on the flip side on the TSX, after the company warned of a delay at one of its key startup mines in Greece. That delay is going to cost an additional $50 million. So that stock hurting today down almost 9%. More than 9%, actually. If we take a look at Amazon, this is another big stock that's moving today. Shares up, despite Amazon saying its services were taken down by an AI coding bot. It finished the day up almost 3%. Amazon says hackers used AI to breach 600 firewalls in a matter of weeks. But despite that, the stock doing not too bad to end the day on this Friday. And joining us now for some movers south of the border is Bloomberg senior equities reporter Bailey Lipschultz. So it's good to have you. Let's start with Anthropic. It's unveiled a new security tool, and that's got cyber stocks seeing some pressure as a result. Anthropic just kind of mixing things up once again.
Yeah, mixing things up in the one area that people were kind of hopeful could be immune, if you will, to the impact of Claude and their various rollouts was cybersecurity, but that did not seem to be the case today with Anthropic rolling out that tool saying that it can help scan some underlying softwares and detect some of the potential bugs. So that caused pretty notable selling pressures. You can see CrowdStrike down almost 7%, Cloudflare down 8%, and Zscaler down more than 4.5%. On a size and scope basis, these have been stocks that have been volatile in recent weeks and months, but it did seem like this was one pocket of the market that had been benefiting and seen almost as a positive read across from the unveiling of these different AI tools, as you see investors and money managers really living update by update from Anthropic's team, as well as the team over at Google's Gemini, as well as OpenAI, is certainly going to be a theme we continue to watch, but certainly one that, again, I think when you talk to investors, they were expecting cyber to stay at least a little bit insulated. And today's update was a big warning sign that at least for now, is not going to be the case.
Interesting stuff. Okay, next up, I'm not sure if I'm pronouncing this stock right. Akamai is down quite a lot today. What's the reason for that?
That was pretty perfect. Down after earnings, the quarterly results pretty strong to end 2025, but the big focus from analysts is potential spending and impact on margin going forward in 2026. This is a company that operates partly in cyber as well as cloud computing, as you can see, had been getting a lift from kind of investors rotating away from your core software, but it did seem like, at least when you look at kind of the read through or read across from Wall Street analysts from the print, was the higher cost of input impacting the company in the longer term. Obviously, we've been hearing about chip shortages and demand for storage and capacity. That does seem like it could be denting Akamai. Again, shares were lower after the results and then only really extended some of those losses after news around that Anthropic Claude update as it relates to cybersecurity added to some of that pressure and was, again, the worst performer in the S&P 500 today.
Ouch. Okay, last up, holding company Celsius up today on an upbeat business update. So what was that update?
Yeah, they were at CAGNY, which is a big consumer-facing conference here in New York, and the management team really talking up demand for energy drinks, which is really their bread and butter, excuse me, geez, as well as potential for their women's focused energy drinks. So really talking about their ability to grow shelf space. Obviously, the big focus when you look at energy drinks partly is at your regular retailers, but really at that convenience store. And management was quite bullish on their ability as we head into the spring on them to be able to expand their market footprint at gas stations and the like, and really only expand kind of the visibility of their different brands with some of those female-focused energy drinks. As you can see, though, still really not where it was in late summer, early fall, but definitely does seem, at least when you look at the analyst read through, to be taking a step in the right direction for a company that has been, when you look back over the last few years, one of those high flyers.
Yeah, for sure. Okay, interesting stuff. That is Bloomberg's Bailey Lipschultz joining us live. Bailey, thanks for that. Up next, U.S. markets closed higher today as investors digested the Supreme Court's ruling on Donald Trump's tariffs. We've got more on that in a moment. Stay with us. Markets in the U.S. rose today, even though the Supreme Court struck down Donald Trump's signature IEEPA tariff policy. So for more, let's welcome Matt Orton, Chief Market Strategist at Raymond James Investment Management. It's good to have you join us. Thanks so much.
Great to join, Lindsay.
Okay, so we're watching markets react today in the green even after the Supreme Court ruling. Is that the reaction you would have expected?
So I'm not surprised that the markets rallied. This was largely expected, so it's not really a surprise to anybody that the tariffs were struck down. I think there's an expectation, or perhaps the knee-jerk reaction is that we have a little bit more clarity with respect to what tariffs could look like in the future. And while that's true to a certain extent that these IEEPA tariffs can't be imposed anytime that the executive wants them to. Tariffs are not going away. And if anything, we're going to have to now sift through implementing tariffs through other sections under the U.S. Trade Code. So a lot of these tariffs I fully expect to be implemented in other ways, and many of which through this 10% global tariff that's being implemented. And then further down the road, once we can get to Section 233 or 232 or 301, I think that's going to be determined, and perhaps still more uncertainty for the overall market. But I think the market's rallying because fundamentals are good, and just another catalyst is now out of the way.
So some uncertainty still, but as you say, maybe some certainty. Maybe it's still too early to tell, but would this affect how you would position your investments going forward?
So it largely doesn't, because a lot of the investments that we've been focused on are rooted in the overall fundamentals. It's rooted in the idea that I would argue, despite the softer than expected GDP print this morning, that the underlying economics supporting the U.S. economy are very, very strong. We've got a sticky inflation environment, but one that doesn't look like it's moving higher. It's staying fairly consistent, and over the long term, we expect it to start to soften a little bit. Tariffs might help that in the short term, but earnings growth is strong. There's opportunities being created in technology, especially as a lot of parts of software are taken out without really looking at the overall fundamentals. Industrials continue to remain incredibly strong. Energy markets remain supported, and earnings look like they're inflecting higher. So a lot of those have been our favorite sectors so far this year, and that remains the case right now, irrespective of what's happened with tariffs.
Okay, now you mentioned the fourth quarter GDP results that came out today. So I want to ask you a little more about that, because it was significantly below estimates. Is that a one-off, do you think? Is that because of the U.S. government shutdown that we saw in the fall, or is that something else?
Yeah, Lindsay, that's exactly it. I think it's that latter piece. The U.S. government shutdown materially took away from the overall GDP print. So if you look through that, a lot of the investment consumption, those numbers remained relatively strong and fairly consistent with the past prints that we've seen. So I think we can look through some of that weakness. The one thing to home in on, though, is that the inflation that's implemented in that GDP report, that was higher than expected. And so I think we have to now grapple with the fact that the market might be a little ahead of itself with respect to Federal Reserve cuts. And so I would look at that as a potential catalyst, maybe for some more volatility in the near term, especially as we head to March and get updated economic projections from the Fed. But my main message to clients, Lindsay, is that if we do have any volatility around inflation, around what happens with the Fed, investors should lean into that volatility, because the underlying fundamentals still remain very, very strong. And I would be a buyer of any significant dips in this market.
Is that what you mean by leaning into that volatility, is buying on the downside?
That's exactly it. And you want to be selective again. Industrials, some more cyclical parts of the market, energy, those are our favorite areas to look at, as well as the AI CapEx beneficiaries on the technology side that may have been thrown out with the bathwater, as we've had a lot of these rolling sell-offs as a result of AI fears.
Yes, you mentioned the AI spending. I wanted to ask about that. I'm wondering, there's predictions this year that 2026 will actually be another resilient year for the U.S. economy. Do you think that that increased aggressive kind of AI spending we're seeing is offsetting some weaknesses in other sectors?
It's certainly contributing to very, very strong growth. I think we're actually seeing a little bit of a pickup with respect to CapEx coming from other non-AI related sectors in the economy. That gives me even more confidence that the cyclical recovery we're starting to see that's benefiting industrial companies is likely to be durable and in place over the longer term. So I think that the AI CapEx can continue to benefit not only a number of technology names downstream, but also more of the cyclical parts of the economy, such as machinery, such as trucking, other areas that are going to be needed to build out data centers, build out some of the power capacity that we need. So I think it benefits all parts of the overall economy.
We've got NVIDIA scheduled to report earnings next week. I know you can't talk about specific stocks, specific companies, but just overall, do you believe a strong quarter from a company like NVIDIA could ease some concerns of investors in terms of where this sector's going?
I absolutely do. I think nothing would be better than Jensen coming out and having very, very strong numbers, but also projecting strength with respect to their benefit from a lot of the AI CapEx that's taking place and how that's impacting a lot of the companies that they partner with across the overall supply chain. That might help to allay some of the fears about what AI is doing to other parts of the market. And that sort of strength, I think, might help stabilize information technology. And that's why that's an area where I'm actively looking to buy some of the dips that we've seen, because I think there's a lot of good, high quality names that have just been thrown out with the bathwater. Investors can find good opportunities, especially in those where CapEx dollars are actively being spent.
Absolutely. Okay, we will leave it there. Matt Orton, Chief Market Strategist at Raymond James Investment Management. Good to have you today. Thanks so much for joining us.
Thank you.
Up next, Lundin Gold shares declined today despite the company exceeding earnings expectations. We've got more on what's driving that sell-off after the break. Lundin Gold reported a significant fourth quarter profit increase despite lower production volumes as gold miners continue to benefit from rising gold prices. The stock traded lower today, though. So let's welcome Jamie Beck, President and Chief Executive Officer of Lundin Gold, to our show. It's good to have you, sir. Thanks for taking the time.
Thanks for having me.
Okay, so you reported a significant increase in profit, but what led to the decline in ounces produced?
We had a small mill.
Oh, apologies. We just lost our guest. That's Jamie Beck. We're going to have to try to call him back. Sorry about that. We're going to move on to something else in the meantime. We'll try to get back to Jamie Beck for you. Canadian retail sales are on track to rebound to start the year after a sluggish end to 2025. And so earlier we sat down with Earl Davis, head of fixed income and money markets at BMO Global Asset Management, to discuss if the retail sales are an important metric for the Bank of Canada.
They are an important metric for the Bank of Canada. Having said that, it's not like the U.S., where U.S. is a consumer economy where the consumer spending drives the economy. I would say in Canada, we're more of a housing economy, from the jobs created through housing, as well as the spending for durables because of housing is a bigger driver. So retail sales is important. The Bank of Canada will be encouraged by the number that we see. We'll have to see if this trend continues or if the actual number is close to the preliminary estimate. But it is a good thing, and I think it reflects increasing consumer confidence.
Looking at the fixed income markets broadly, you think there are increasing signs that investors expect one cut from the Bank of Canada interest rate reduction this year?
Yes, and what's interesting is towards the end of 2025, the market was expecting a hike or a percentage, a chance of a hike in 2026. Our team did not believe that. We always believed there'll be cuts in the market. We were calling for 1 to 2 cuts in 2026. Despite the market discounting hikes, we still believe there's going to be 1 to 2 cuts. We ultimately believe there'll be 2 cuts this year. And the main reason why is CUSMA. The uncertainty around that. You saw in the Bank of Canada minutes that they actually highlighted increased uncertainty because of Donald Trump. And to me, that's like words that open up the easing possibility again. And we think if they're going to ease once, they don't ease once. You know, if you're going to ease, you ease twice because you think you need to impact the economy somehow.
The housing market, you don't see much of a turnaround there this year?
No, unfortunately not. We don't see much of a turnaround just because of the inventory overhang. You know, you have to get rid of the inventory overhang in regards to new condos, new townhomes being built. The key way to doing that is lower interest rates. You know, you lower the entry cost of housing affordability. That's helpful in getting rid of that overhang. We do, however, believe that the overhang will be taken care of in 2026. So we do see us coming close to the lows, but we haven't turned around yet.
What about the States? A weakish number for the latest period on GDP. What is your take on the U.S. economy? Is it just ticking along nicely?
Yeah, ticking along very nicely. And when you look at the details of the surprise weaker number in GDP, the biggest driver was government spending or lack thereof, and that was driven by the shutdowns. So a little bit of noise in those numbers. They're actually better than they look because if you kind of remove the government shutdown. So yeah, we're very constructive of the U.S. We believe they're on an upswing from a growth perspective, and we believe this will be the low print for, represents 2025, but the low print in 2026. So
can President Trump claim that he's done a decent job of preserving, keeping economic growth solid, even though, despite the massive disruption around tariffs?
Yeah, you know what? I smile because I think he'll proclaim that no matter what the number is. Right?
That's true, yeah.
if it's a low number, it's someone else's fault. If it's a good number, it's his. So he'll proclaim that it's good without a doubt. But yes, and you have to remember, the key thing in the U.S. right now is that the tax refunds are coming out. They're going to hit consumer pockets, and that is expected to be significant due to the tax reduction from the Big Beautiful Bill. And those refunds come February, March, April. So we expect that to be very supportive of the U.S. economy, at least for the next several months. And we think that'll play throughout the year.
And just finally, we're very tight for time, but you're generally saying if you have a bond portfolio that you're managing, keep it short because there could be drops in bond prices, rises in interest rates?
Yeah, we're saying two things. You want probably a maturity of around 5 years because there's more volatility outside of 5 years. And the second thing, which I think is more important, you do want to have own corporate bonds. We do believe this is a supportive environment for credit, for risk assets, and we are overweight credit and risk assets, and we'll go more overweight if the opportunity presents itself.
That was Earl Davis, head of fixed income and money markets at BMO Global Asset Management. Okay, we're going to go back to Lundin Gold, which reported a significant fourth quarter profit increase despite lower production volumes. The stock trading lower today, though. So we're going to welcome Jamie Beck back to our show, President and Chief Executive Officer of Lundin Gold. Good to have you again, sir. Sorry about that little blip before.
No problem.
So, okay, we'll start again. You reported a record increase in profit, but what led to the decline in ounces produced for your company in the last quarter?
Yeah, we sort of revised our guidance mid-year last year, somewhere between 490,000 to 525,000 ounces. We ultimately ended up coming right in line with guidance at 498,000 ounces produced during the year, and slightly down from, I guess, fiscal year 2020, 2024. We had a bit of a gearbox failure right around the Christmas holidays. It shut us down for 3 or 4 days, and that impacted sort of our final numbers, but really happy with where we ended up with the year.
We've also obviously been seeing a substantial rise in gold prices overall. That's benefited your sector, benefited a lot of companies in the sector. How are you preparing to respond if we see gold prices flip and go the opposite direction?
I think one of the amazing things about our asset, Fruta del Norte, is its cost profile. This is an asset that produces at just over $1,000 an ounce, and so I think even in low gold prices, we tend to maintain margins and still have significant performance.
Yeah, let's talk about Fruta del Norte as well, because correct me if I'm wrong. So FDNS has a mineral reserve, FDN East has an inferred resource. How long will it take and how much money will it require to actually turn those deposits into actual producing ounces?
So FDN South was, we announced our sort of inaugural mineral reserve this year. That means we're bringing into the mine plan and we're starting some development. We've announced the start of that underground development towards the south. And that's going to take sort of 2 or 3 years of development work and some study work. And then we hope to be able to bring those resources into the mine plan. FDN East is a little bit earlier. It was our inaugural inferred resource. So this year we'll do additional drilling to try and further define those resources and upgrade the confidence and hopefully bringing them into our long-term mine plan as well.
But now you have different types of deposits, right? So like, how do you decide which one to develop first, which one takes priority?
No, I think, in many respects, they're very similar deposits. These are epithermal gold vein systems, where they differ maybe a little bit in terms of the width or thicknesses of the veins, but we're seeing some incredibly high grades coming out of FDN South. And in fact, we recorded a 20-meter intersection of about 90 grams per ton recently. So it really is just going to be about finding that optimum underground mining sequence where we'll be able to sort of continue to mine at Fruta del Norte and then supplement that through additional mineralization at FDN South and FDN East when the time is right.
Okay. All right. So let's go back to the earnings themselves, because record free cash flow, no debt for your company. How is Lundin Gold balancing future dividend potential as well as investing in growth and more exploration?
Yeah, there's about 630 million on the balance sheet in terms of cash right now, and that's a level that the company feels really comfortable with. So as a result, almost 100% of free cash flow over the past 2 quarters has been paid back to shareholders via dividends. And I think that's going to be our strategy moving forward. In the gold space, Lundin Gold remains one of the highest dividend-paying gold names out there. We paid about, just over 660 million in dividends through 2025. And as we see gold prices continue to stay strong, assuming that we're still able to maintain our sort of growth requirements, sustaining and non-sustaining capital to try and advance some of these satellite deposits near FDN, we'll continue to return that cash to shareholders.
What about exploration? What milestones should investors maybe watch out for 2026?
It's a huge exploration program in 2026 planned, our largest ever. We've got 133,000 meters planned. It's really split between 3 areas. Resource conversion drilling, so that's maintaining Fruta del Norte and expanding the reserve base there to keep us mining for longer. There's near mine exploration, where we've been incredibly successful both in terms of finding gold, but also a new and emerging copper gold porphyry district. 5 different individual porphyry centers have now been found with strong copper gold mineralization right from surface, and that is growing in size. It's got a strike now of about 10 kilometers and very, very near the existing Fruta del Norte operations. So that's really exciting. And then on top of that, we've got a huge regional land package that's seen very, very little exploration over the years, just surface soil sampling, that kind of thing. We'll be starting our first ever drill program on some of those bigger regional targets this season as well. So really exciting from an exploration front.
Yeah, lots to watch for. Okay, Jamie Beck, President and Chief Executive Officer of Lundin Gold. Appreciate you joining us today. Thanks so much.
Thank you very much.
Coming up, U.S. President Donald Trump is imposing a 10% global tariff after the U.S. Supreme Court struck down his tariffs imposed through federal emergency power laws. Stay with us. Details on that after the break. U.S. President Donald Trump is imposing a 10% global tariff after the U.S. Supreme Court struck down his IEEPA tariffs on countries across the globe. The ruling says Trump exceeded his authority by invoking federal emergency power laws to impose the so-called reciprocal tariff. So here to tell us what this all means and how it impacts Canada is Jean Charest, former Deputy Prime Minister of Canada. Mr. Charest, it's good to have you join us. Thanks so much.
Thank you, Lindsay.
So I'm wondering, what was the point of the Supreme Court striking down these IEEPA tariffs if Donald Trump is just going to turn around and impose these 10% tariffs anyways?
Well, it is a major victory for those who are opposed to tariffs. And what it does, essentially, it just reestablishes a clear fact. The competency over imposing tariffs is with Congress, not the executive and not the president. The president has emergency powers, and he misused them. That's what the Supreme Court is saying. He used them in a way that wasn't provided for in the law that he used. And so now it's back to the drawing board with all sorts of other consequences. And when he says that he wants to impose a 10% tariff over and above everything else he's doing, he's using another older piece of legislation, which allows him to do it for 150 days, Lindsay. But after 150 days, it has to be renewed by Congress. So not a very solid response on his side. Now, the downside to all of this is unpredictability, and the president clearly will seek other solutions. He'll try to lash out, and it means that we are just going to have to be very careful. On the Canadian side, we do not know at this time whether the 10% tariffs he's talking about would be over and above the fact that we have no tariffs under CUSMA, and there's zero tariffs for all the merchandise under the trade agreement. If that's the case, then it is bad news for Canada, even if it is short term.
I want to get to Canada, obviously, in a moment. As you're saying, still a lot of not a lot of clarity, I guess, for Canada, but we'll get to that. I just wanted to ask, first of all, Donald Trump is saying 232 and 301 tariff levels remain. Can you explain what he's talking about? What are those levels?
Well, for our listeners today, the tariffs that were struck down were broad-based. He could say to Europe, it's 15% tariffs on everything. The other tariffs, 232, 301, are product-specific. So in the case of 232, for example, he says he asked the Trade Department to look at a specific product to determine whether there's unfair practices. They have 270 days exactly to report back to the president. If they come back with a conclusion that says, yes, it's unfair, then he can impose a tariff. So there's a process in the case of 232. There's a process in the case of 301 also. And in the new 10%, apparently he's going to do it under this old legislation. It's only good for 150 days. So much more complicated for him than the tariffs, the broad-based emergency tariffs under national security pretext that he had imposed on much of the world.
Okay, got it. So, yeah, I want to talk about much of the world as well. But first off, you were talking about, how this will affect Canada. We've obviously got the renegotiation of CUSMA coming up in the summer. Still a lot of, not a lot of clarity, I guess, for Canada in terms of how this could affect us. Is that right?
Well, that's right. And what we do know that the difference between Canada and Mexico and the United States and other countries is the fact that our supply chains, Lindsay, are intimately linked. And that's why the fundamental interest of both sides is that we renew CUSMA. Otherwise, it would take tens of years, hundreds of billions of dollars to undo the supply chains that have already been built up. And for that reason alone, it makes just good common sense that we renegotiate CUSMA and also take into account the fact that these tariffs have cost American households in 2025 about $1,000. It's going to cost them about $1,300 in 2026, and that's according to the American Fed. They're the ones who are coming down with these numbers. So there's a cumulative effect here that argues for a renewal of CUSMA.
But is it really up to us at this point? I mean, obviously, there's a lot of chaos when it comes to negotiations with the U.S., with the White House at this time. I mean, how else can Canada try to protect itself?
Well, we're going to continue to reach out to every decision maker in the United States to make our case. And at one point, the dam will break, whether it's the people we do business with, small, big businesses, or the political allies that we have in the United States. The midterms are coming up. There's a cost to the American household in terms of, it's like a tax. It is literally a tax on an American household. By the way, the biggest tax increase on Americans since 1993, Lindsay. And add to that the midterms that are coming up, affordability is an issue. These are all the cards that are out there that we need to work with. The real challenge, though, is the intangible uncertainty that we have on our economy, which is an intangible tax. And what that translates into is decisions not being made to invest, to go into markets, because people in business are waiting to find out where all of this is going to end up.
Yeah, there's a lot of uncertainty at this point. Okay, that is Jean Charest, former Deputy Prime Minister of Canada. I appreciate you joining us and breaking this all down for us. Thank you.
Thank you, Lindsay.
Coming up, we are spotlighting Black entrepreneurship in Canada and how one startup went from an idea to an acquisition. More on that coming up right after the break. Alberta Premier Danielle Smith says out-of-control immigration levels are overwhelming the province's core social services and has announced a referendum will take place in October to address this issue. CTV's Kamal Karamali has more.
Alberta Premier Danielle Smith is going to put 9 questions to an Alberta-wide referendum on October 19th. And that includes proposals to restrict social services from some immigrants. In a 13-minute televised address Thursday night, Smith says she's not afraid of direct democracy and trusts the judgment of Albertans. So what are these 9 questions she will ask? Well, 5 of the inquiries will focus on immigration and access to provincially funded services, including whether Alberta should take more control over immigration levels. And one of the questions directly asks Albertans if non-permanent residents should be charged a, quote, reasonable fee to access health and education systems. Another question asks for approval to cut off newcomers from social services if they don't fall under Alberta approved immigration status. The question doesn't really define what that status means, though. And there are other questions that delve into the Constitution, asking whether Alberta should open negotiations with the rest of Canada to abolish the Senate and give provinces the power to appoint Superior Court judges. So there are 9 questions in total, and whether provinces should be able to opt out of federal programs without losing funding is also another one of those questions. Smith linked projected budget deficits that are predicted to be a multi-billion-dollar deficit to falling oil prices and what she called out-of-control immigration. So this is really her way of trying to, in her sense, mitigate that, and saying Alberta's population has grown by nearly 600,000 people in 5 years, and that is putting pressure on schools, on hospitals, as well as other social services as well. We've also heard from the deputy leader, Raki Pancholi, who accused the government of using immigration as a political distraction ahead of what is expected to be a multi-billion-dollar budget shortfall. Kamal Karamali, CTV News, Toronto.
And it, of course, is Black History Month. So we're looking at Black entrepreneurship in Canada and the potential challenges and wins with our next guests. I'm joined in studio by Ifosa Obano, program manager and founder of the Black Founders Network to my left, and alumni of the program, co-founders Tanika McLeod and Nathan Knight of consumer insights platform One Click. It's good to have all 3 of you join me. Thanks so much for coming in.
Absolutely. Thanks for having me.
So Ifosa, I'll start with you. Can you tell us a little bit more about what BFN actually stands for and kind of the reasons behind its importance?
Yes. So the Black Founders Network, BFN, we're an inclusive community for Black entrepreneurs at all stages of their journeys. And since we started in 2021, we've been able to grow to over 10,000 Black founders across Canada. We provide the right mix of capital, community, and capacity building for founders to start their businesses, launch them, and scale them.
Because when it comes to business, there's a lot of discrepancies there, right? Like 70% of Black-owned businesses across Canada were not eligible for the federal Canadian Emergency Business Account during COVID. So how did BFN help with that? And why such a big gap?
Yeah, I think there's tons of reasons why. Before we started BFN, we actually spent a year talking to Black entrepreneurs one-on-one, trying to understand why these gaps exist. And we found out that, the biggest root cause was lack of community. Lots of Black entrepreneurs were often the only Black founder in the accelerator programs they were in, or talking only to non-Black investors when they were trying to raise funding. So this gap existed because we were trying to get support from people who could not relate to our lived experiences. Mm-hmm. And that's why we decided to build a network, to provide that, like resource, capital, networks. And since we started, that stat has moved in the right direction. Still a lot of, room to grow.
Yeah.
But we've been able to provide over $100 million in financial value to Black entrepreneurs since we started BFN. And that just shows what's possible when we really build a solution for us and by us.
That's amazing. Okay, I want to bring in Tanika and Nathan as well, because you, of course, are the founders of One Click. So first off, Tanika, what is One Click? Can you explain the business?
Yeah, so it's a market research platform that helps you analyze social media to understand public opinion on virtually anything people talk about online.
So what was the reason for deciding to start this business? Who wants to answer that?
I mean, to be honest, it might be controversial, but we didn't start it because we had a specific problem in mind. We actually started it because we felt a lot of, artificial ceilings in our day-to-day work, after university. And so we built the company really to go beyond those ceilings and excel as exceptional people.
And being part of BFN, like, how did that help your business?
Tremendously.
Yeah, how so?
Yeah.
I mean, they were among our first customers. They actually provided grant money to the company. They provided mentorship and support. So all of the different things, the community that a startup needs to thrive, they were able to really provide that.
And I want to click into the grant. It's a kind of a funny story. When we got the grants, we could either pay rent or pay our development team, and we decided to pay our development team, and it was risky, but it paid off.
It's such an interesting thing when you hear about these startups, like the decisions and choices you have to make in terms of where your money goes, right?
Absolutely.
So how does it work then with BFN? Like, do you find the company, like, for example, does one click reach out to BFN? How does that work?
Yeah, I guess we met at an event. Like, they attended one of our events, so we host a lot of events. Shameless plug, we have one tomorrow. So they came for one of those events, and they were very resilient founders from the very get-go. Like, they came in and, were trying to pitch us the vision, and we usually start from the community layer, connecting one-on-one. And then we have programs that are tied to the different stage of the entrepreneurial journey. So they participated in our Accelerate program, which is for companies that have some traction, but we need to help them boost their growth. So they get access to grants, like they said in this program, but more importantly, they get access to really structured support to scale their businesses. After completing that, they won the People's Choice Award Demo Day. And with BFN, when you come through BFN, it's sort of like turbocharges your growth. So they left BFN and got into Google, got into different accelerators shortly before the very exciting acquisition that happened last year.
I just wanted to mention that. You were acquired last year. Congratulations. It shows kind of like how your company is continuing to excel. Tell me about that, how it feels, and also just maybe how BFN helped you get there.
Yeah, I mean, Ifosa was one of our key mentors that we went to for support through that experience. And honestly, it feels amazing being able to, have that chapter with our startup team and really build a foundation for us to continue to build together. I think right now is such a critical moment. We have this strong conviction about this. We're experiencing, of course, everybody knows, this amazing kind of tech cycle.
Yes.
I think this is a once-in-a-lifetime kind of tech cycle, even though they happen every couple of decades. And so right now, we're really passionate about participating in that. Because when we talk about a tech cycle like this, it's really something where new technology is introduced and it radically transforms experiences so much that new products and new market categories are created that never existed before. We saw that in the mobile app era. There are so many categories of products that exist today that didn't exist before then. And so we're really passionate about participating in that, and this move has really just made that so much better for us and our team to be able to do that.
It's a fast-paced industry, right?
Yeah.
Like fast-moving, especially in this day and age. I want to get back to, some of the hurdles that maybe Black entrepreneurship faces in Canada, obviously, because we're talking about, Black History Month and how Black entrepreneurs can kind of face some of those challenges. What do you think are some of the biggest ones that need to be addressed, whether it's by the federal government or whatnot?
I think that, being overlooked and underestimated is, of course, part of that experience. And I think that especially when we talk about fundraising, Canada has so much great talent, especially in the Black community. There's just a lack of funds, going around that is accessible to founders. And I think that's something that BFN has done an incredible job at, is being able to actually put money into the hands of founders, not necessarily through loans or anything like that, or even pitch competitions where only one person wins. Like you've created pitch competitions where several startups win, so that it's not so much of a survival of the fittest. We can't really operate from a scarcity mindset and expect the ecosystem to grow from that. And so I think that's a mentality that really needs to change when it comes to resource allocation, is actually putting capital into the hands of founders and trusting them to make good decisions with that money.
Ifosa and Nathan both nodding along. I don't know if either of you have, maybe Ifosa, if you have anything to add to that.
Yeah, very well said. I think, from doing this work, over the last 4 years, we've seen so many brilliant minds. And I think we've learned that talent is evenly distributed, but opportunities are not. And when you back, underestimated founders who typically have to work twice as hard to get, anyone's attention, it's a very smart business decision because you have even higher ROI. And the other thing I think important conversations like this do for the Black community and for the broader community is it also helps, the Black kids watching this right now to see that, it is possible for them to, be Tanika, be Nathan, When I was growing up as a young entrepreneur, aspiring entrepreneur, I would count on 10 fingers Bill Gates, Mark Zuckerberg, Steve Jobs before I counted a Black entrepreneur, right? And our vision really with BFN is to make that change, to make it normal that anyone is counting successful entrepreneurs and you don't have to go past your first 3 fingers before you count a Tanika, a Nathan. And I think, increasing representation is a big part of that. Like having, them spotlighted is a big part of that because it shapes the next generation.
For sure. So well said. Well, thank you to the 3 of you for joining us today in studio. Appreciate it.
Thank you.
Thank you. And stay with us. Up next, we're uncovering trending tech stories today. That's right after the break. Welcome back. Joining us now on the latest technology update is tech analyst Carmi Levy. Carmi, it's good to see you. Thanks so much for joining us. A lot to go over here. We'll start with this landmark social media addiction trial, which is happening, which is interesting in and of itself. Mark Zuckerberg saying today that Meta is not responsible for social media addiction. What's going on there?
Yeah, I mean, it's almost like social media's tobacco moment. It's an historic trial, first of an expected, upwards of 1,500 trials waiting in the wings, all kind of waiting for the precedent to be set with the first few trials in this lineup. And, Mark Zuckerberg showing up to court, essentially echoing the talking points that he's been echoing for years. It's not our fault. In this particular case, this plaintiff, her mental health issues pre-existed her starting to use social media, that the internal documentation that makes it look very damning that the company knew that addiction was a feature they deliberately designed in, actually rewarded their executives for it, that they're being mischaracterized, that it's being taken out of context. So a somewhat defiant message, essentially big social pushing back on these allegations that have been dogging it for years, and basically saying we don't agree with the notion that our products are harmful to the mental health of young kids, and they're going to fight it with everything they've got.
It's so interesting that they're fighting that connection between social media use and mental health, when I think for a lot of us today, it feels like that could be a given. Do you think that argument holds any weight in the outcome of all this?
Yeah, I mean, in the minds of a jury, that could be the pillar on which this entire case rests, because it looks like the defense lawyers are kind of banking on, maybe there's a correlation, but there are other factors in play that determine an individual's mental health journey. You can't assume that all of it is attributable to their social media use. In this case, they're saying, she was a troubled child, she had a difficult childhood, and so to blame social media is somewhat, they say, disingenuous. Will that play in the minds of the jury? Not sure. Will it play in the minds of the public? Probably not. And certainly investors are nervous. For the past month, they've been driving Meta's shares down. They've been driving Google, which is also on the receiving end in this particular trial. We're waiting for their testimony as well. So it's not a good look for the industry. But again, this is how they've chosen to play it for the past number of years, even as the research continues to pile up that suggests otherwise.
Something interesting as well, back in the headlines, is ByteDance this time around saying it will add safeguards to SeedDance 2.0 following Hollywood backlash. So first of all, maybe for our viewers, explain what SeedDance 2.0 is.
SeedDance is a video generator app, an AI-powered platform, and it's very much like OpenAI's Sora, Sora 2, Google's Veo 3. Basically, you type a prompt in, and it creates a video for you. But as is often the case with video generators, it's significantly better than everything that's come before. So the fidelity of the video is remarkable, and this one even looks much more cinematic than previous video generators. So as soon as it was released, the internet was flooded with videos that looked like movie trailers that used celebrity faces and images that used copyright and intellectual property material belonging to someone else. And so, of course, studios shot out cease and desist letters. Everybody freaked out because, again, the basic notion of copyright and IP is put under threat when tools like this become available to the public. And so that's kind of where we're at now, is ByteDance did not include protections against using a celebrity's face or image. They've now said that they will include this this technology going forward. They will update the product. But again, the industry is always pushing the bounds. And then, of course, crossing red lines, and this is what happens. Add to the fact that this is ByteDance. This is the Chinese-owned company that also brought us TikTok. They obviously have quite the legacy, and also those concerns that all of that data that's being collected for this AI platform is now being shared with the Chinese government. So yet again, ByteDance stepping in it, yet again trying to step out of it.
So much to talk about, so little time. That is tech analyst Carmi Levy. We'll have to leave it there. Thanks so much for joining us.
Appreciate it, Lindsay. Thank you.
Thank you. And we'll take one last quick look at the markets before we wrap up here, because the TSX reaching another all-time high today, finishing up by 0.6%. S&P 500 and NASDAQ also up to end the week. And that does it for today's program. Thanks so much for watching us.